Okay. I think that should be good. What's up, guys? Happy Wednesday. Welcome to the stream. This is Obe TA, where we do technical analysis on things that have charts. All right, we take a look at them, try to decipher what they're telling us, what they're doing, what they're going to do, and try to make a little money in this racket. Right? That's what this is, really. Something designed to take your money from you. So here I am trying to help you in that quest of beating the market. All right. So welcome. As you can see by the chapter of this stream, ET 242. They play off of the that Shakespearean play of Caesar or whatever, where you had too brute, whatever, dude. Was it clever? Maybe. Did it make me laugh? A little bit. I chuckled. And as long as I chuckle, I'm okay with it and I like it. So hopefully you guys do too. But the point of it was ET 242. We are back below 42,000 on Bitcoin. Major historical level. We move it back to the daily to get a better idea of it. But as you can see, this peak back here from January 8th, 9th, 10th, whatever you want to call it, right? This inflection point from back here, you were above and you are now below. So you are entering back into the zone, being the support here from September 22nd, 40,000, also touched here January 10th, a little more recently. So we're back below it again. On the day, we've got about 9 minutes until the candle closes, at which point you will close below that high from back here, and you're making your way downtown back to 40,000. Okay. Which, I do the gross sound, but it might not actually be that gross, because 40,000 is the area we want to get back to test. Because if we can test it and hold it and confirm it, then that could be the dream entry point, right, on Bitcoin. That's where we can expect to see it reverse back towards the upside, and that's where we could start to see some of the other altcoins that have sold off to that point develop into their divergences and whatnot to move on as well. But yeah, as of right now, not much on the daily, so we're starting to get away from the hidden bearish divergence kind of stuff. If you want to count this shoulder, I guess you could have an argument for that being a lower high. If you're counting this area right down here, it's not quite its own little island for divergence, but it's got somewhat of a crest going there. So if you wanted to say like this is your hidden bearish divergence, sure. A little weak in my opinion, but a little weak is kind of good because we just want some weak bearish divergence continuation down to 40, right? That's fine. That might be what that implies, and that's okay because that's where we want to go essentially to hold. This is not a song that I want to listen to. Sounds like a porno or something. Try this one. There we go. Might be a little better. All right. Sorry about that. Yeah, so moving back down to 40,000 seemingly. All right. Did have the death cross, right, if you're adding to the bearish arguments of continuation to the downside, but let's move to the 4 hour. All right, so we take a look at the 4 hour. We'll notice that January 18th yesterday, starting to treat the 50-day moving average as resistance again, right? So coming up, rejecting off of it again, and then coming back down. So you're getting some upper wick kind of stuff, no divergence really off of a bullish engulfing candle. It's just prime to continue down, right? It's what this is implying. If there was the argument to reverse and get back up towards 47, you want to start with breaking that moving average, okay? You don't want to be treating it as resistance. All right, you did hold it back here January 14th, got a slight kind of pathetic rally And then now you're starting to sell off again, showing resistance, sellers coming in. So nothing to get too excited about. Maybe some kind of harmonic or something going on. Not really. 886 brings down to like 40,000, 219. That's still not a formal harmonic. It's not a bat or anything like that. It's a little too deep. But yeah, that's seemingly where you're going with this thing. And really, if we throw Fibonacci on it from the that shoulder back there, got up to the 50% retrace, which it does oftentimes, right? Goes down and then comes up 50% before selling off again. So it's just following Dow's theory in a way here. That 50% retrace, Charles Dow talks about it, moves down, traces 50% before reversing to continue its path or whatever, right? But yeah, man, you're below 42. You're treating 50-day as resistance again. 40,000 seems to be the move. Okay, you're about to have a bearish engulfing candle here, which would in fact invalidate this bullish engulfing candle back from January 11th officially. You close below the body, you have officially wiped out the argument for this bearish engulfing candle. And it's like you had the hammer of God, hammer of Thor, hammer of Hephaestus, whoever, came up, and it was kind of a pathetic rally, right? Where to go up to 44,000, couldn't make a higher high, all right? And you're starting to wipe out even any argument for a higher low. So what you ultimately want to see here when you get back down to 40,000 is you want to see this momentum just go a little bit red. So by the time that the momentum is here, we want price to be like here, let's say, right? And then start to show something, another hammer, a bullish engulfing, something to start pivoting the oscillators back up to towards the upside, because then at that point you'll have even more Class A bullish divergence, just continuing to give the signs of seller exhaustion. And then at that point, the RSI hopefully doing the same thing. And then at that point, you get your major reversal once the RSI is also playing along, right? Right, that's what we want to look for. Something like this. Come down a little more, and then ultimately just make a higher low with like same low. Have some Class B or something at that point before reversing like seriously and really confirming that 40,000 is a bottom, and then going. That's usually where you'll see the ticket. It's not often that you get like a triple touch. Sometimes you'll get a triple bottom, but double bottom stuff like this with so much divergence is that's what you're looking for, man. All right.
Right.
So yeah. That is Bitcoin. Only news we got today really was seeming confirmation of going back down to 40. Cool. All right, let's move it to Ethereum here. All right, off of the bullish bat harmonic, we had that reaction, right? Reaction off the bullish bat, coming back down, similar kind of story to Bitcoin to test 2,900. All right, you're just going bearish engulfing candle up top at on January 17th. Really, the falling three methods that we were talking about at resistance at like 3,300, and that's going back to these little shoulders here, August 14th, August 23rd. I do believe we also had some confluence there. The 236, a little more on the local shoulder. And it's like the 50% retrace from this high on January 3rd, before you had the major sell-off, retrace 50% before turning around and selling back down towards 2,900. So we'll see. And at that point, again, it doesn't have much room to go until it gets there. And it could just start barely going red before pivoting if 2,900 holds, right? And then you have your Class A bullish divergence, right? And you would have it on the MACD and you would have it on the RSI. And that's what I always talk about here. You always want both to really show a strong level of seller exhaustion. All right, reversal stuff. Okay. So yeah, that's pretty much it with Ethereum. There's no divergence or anything right now. We move it to the 4 hour. So the 4 hour was showing, right, we had this big bullish batch structure. And then we had the small bullish batch structure going on, right? Caught the reversal here, or reaction, I guess I should say, at the 886, okay? And we just form it from the low. We've got this M-type structure showing. We just take it from the low, throw it to the top, retrace down, okay, shoulder, and then to bring it down to like the 886, right? And one thing that you want is the more levels here, I guess, like from A to C and B down to X, like those levels, the more that you can get to line up with real Fibonacci levels. We're talking about the 382, we're talking about the 618, the 886, even the 786. When you can get them to line up with that, it just makes the harmonic stronger. So notice this B to D point, it's 1.969. That's not a Fibonacci level. The 886 is, and you also had a point here at C, it was 886, right? So you've got two, right? But this B to D, if it were something like a 1618, and then also at the 886 from A to D, that would just be a level of confluence. It would be the 1618 retrace from B to C, and then it would also be the 886 retrace from X to A down to D. All right, so if that makes sense, I don't know, but it just adds to the strength of the harmonic if you can line it up with the literal Fibonacci levels. All right, and it's not ever, rarely will it be perfect, and that's just testament to, if it is perfect, to really pay attention to it. The odds are just better that it plays out. But yeah, this one close enough to the 886, got a little reversal, but now, bearishly engulfing again on that prior candle. So we did just have the candle close on the day. Let me move back to Ethereum. We're on the daily. Similar kind of stuff, right? It's like, oh, it hasn't completely invalidated the bullish engulfing candle from January 11th. Yeah, it kind of has. All right, I mean, you're right there. I wouldn't say that this kind of price movement is still playing the bullish engulfing candle. All right. So you're most likely coming down to test 2900. But again, that could be a really good spot, given where the oscillators currently are, to take a position on Ethereum, man. All right. Frosty. Cool. Let's take a look at the weekly, just cause. All right. So I mean, you have 4 days, and the weekly is touching the 200-day moving average. Or, I'm sorry, the 50-day moving average for the first time since May of 2020. This candle back here, May 4th of 2020, was the last time that the weekly has touched the 50-day moving average. All right, you have 4 days to get it together on this thing, but as of right now, you're painting a potential bearish engulfing candle, which would most likely send you down below the 50-day moving average. So that's new information that I don't know that we necessarily want to see, right? Yeah, we move back to the daily. It's coming close to the death cross, right? Arching in that direction. So, I mean, who knows if it'll get there, but price action like that, to me, would imply further move down to something like 2600. And then below that, I mean, we're talking down to this peak back here from, let me just get this off the daily. This peak back here, like 23 from like July 5th. All right, so it could be a decent amount of downside still on Ethereum, and really 2000 with this peak back here from February 19th, right? Treated as support a few times and psychological. support, all right, down here, and that's like a 32% drawdown from where we currently are. So do we really want 29 to hold? Just given the peaks, inflection points, resistance, we want it to hold. You really don't want to go below 2600, 2661. All right, this low back here from September 21st. All right, you are already below your moving averages and everything, but yeah, if we can just confirm these levels that we're about to get to and start reversing, Bitcoin included, right? Ethereum needs Bitcoin to do that. Then we'll be in better shape. And at that point, we have the that what is called a type 2 return on this harmonic here. Being the reaction and then the confirmation. Right? Okay, cool. Let's move it to Binance Coin. All right, so let's just give it the eye test here. Hold on a sec. Let me remove these. So Binance Coin, and this is how we would size this up. I mean, it's already sized up. So as soon as I place this down, right, this is going to be the main point that we're trying to get above. This peak from August 25th and September 6th. Okay. At that point, you also have this upper trend line now developed. Right, this supply line that you'll have to get above as well. You're falling into this just kind of a downward channel. All right, so you're just in the middle of this channel right now, heading down to these this peak back here from June 3rd. Also resistance here September 16th and October 7th. So your next level, 438, 434. Again, at that point, you get there, you could be showing some Class A bullish divergence. And the thing that's different about this support level is just where your oscillators currently are. If you get down in here, you will have just barely started going into the red, right? At a level of support. So if you could do that on the RSI as well and start to pivot, you're going to have that divergence on the MACD and the RSI, which is something that you have been lacking this entire time along, all right? So that's what we want to look for, man. Nice. All right. Same. Keep your eye on stuff. I know it's red and everything was in the red today and it looks bad. And you know, if you read the news and they're going to tell you that it's done, it's selling off down to, you know, levels from like 2016 or whatever. Just keep an eye on the charts. Look for signs of reversal at important levels. All right. As a swing trader, that's what you want to do. So, yeah, that's it for the daily. Let me take a look at the weekly. Just bad price action after this would be a piercing pattern. This candlestick here. Just not good follow through. All right, and we move it to the 4 hour here. This is the potential move that we could see, and it would be something like this, right? It would be come down, come up, retrace 50%, like we've been seeing with a lot of assets, that Dow theory stuff, come down to the 618 and then move back up towards the 886, complete a bearish bat. That would put you at the upper trend line that we've been seeing back from here, all right? So that's going to be a major point of resistance, as well as horizontally at like $510, $500. So it's like, even if you start to pivot here and move back towards the upside, you'll probably just reject, make a lower high, and head down inevitably to the horizontal supports of like 438, 434. All right. That is what I would assume, given something like that, all right? It's just, this is what we're just seeing lately. It's just major resistance, above. It's not a joke when you break those supports. That's why we say when you break those supports, it's more likely that you're heading down to the next level of support before making any kind of move back to reclaim those spots. Like as soon as you broke these peaks back here from September and August, as soon as you broke those, it just made all the sense in the world that you're heading down to the other peaks, right? These other levels of what were once resistance, these inflection points. All right, that makes sense, you're heading down there. Then on the way back up, that is now going to be resistance. So, I mean, look at what you did. You came up, you didn't quite even get there. I mean, technically you got to some of these wicks, these wick lows. I mean, yeah, I guess technically you were close enough to be considered rejecting off of that as horizontal resistance now, right? So just confirmation of continuation to the downside, and who knows, maybe you come down to this horizontal support again and you get a higher low at that point, right? Maybe. Then you come in to test the upper trend line here, and the 50-day will be waiting for you there, I'm sure, as well. So it's just like, how many things? 1, 2, 3, and then on that 4-hour you've got that bearish harmonic, so another argument for it, right? This is just a very strong zone area of resistance. Okay. Yeah. Currently trying to hold on to the 200-day moving average. All right, so it just closed its candle as well, literally at it. So we'll see what tomorrow brings. You know, oftentimes after a sea of red on the day, we'll get a little bit of, you know, some buying, especially at a point of support, I guess, if you want to call the 200-day moving average that. Could see something like that, but yeah, ultimately looks like you're coming down to 438 again. Now this one's interesting because the bullish engulfing candle here, technically until it gets below it, is still in play. What I always thought was interesting about that is just like, then what is this I guess the bearish engulfing candle here is kind of invalid in a way. I don't know. I think that this bearish engulfing candle still has, well, in a way it got it down to the 200-day moving average. So I mean, this being the major candle here, yeah, you stay above 425, 426, or at least I would say start to pivot off of the support, then that bullish engulfing candle is still valid, is still in play. All right. So yeah, that's Binance Coin. Let's move it to the weekly, just because not really much to say. 4 days till it closes. Maybe you'll take a look at the 3-day, just why not? 3-day getting actually some, so 3 days is kind of interesting, right? The 50-day moving average being regarded as resistance now, all right? That last candle close, which today was the first of the 3-day move, but yeah, 1, 2, right? Regarding it as resistance now at the historical resistance, right? It doesn't make any sense as to why it would just suddenly reverse here and head back up. So if that's what you're thinking, that Binance Coin is just going to reverse now and go back up, there's just not a strong argument for that. More likely you're coming down to 438, all right? That is Binance Coin. Move it to Cardano, which is one that looks really interesting. And the reason that it looks really interesting, let's move it to the daily, is because you are forming potentially this kind of inverse head and shoulder structure. All right. So you've made your shoulder, and this is just the head and shoulders just upside down, basically, right? So what you have done is you have found support at $1.20, right? You've come up, got above the $1.50 mark. That's this historical resistance looking left. All right, then you sold off and you went below $1.20. Didn't quite get to the dollar, which was good. Okay. And then you have come up and you got above $1.50 again. So ultimately what you want to see here on Cardano, and this could be a really big deal, especially since you've got, you know, the Class A bullish divergence going on the RSI, kind of on the MACD slightly, right? Class A on the MACD slightly, definitely Class A on the RSI. If you start to do something like this and you come down and now you're at this historical support that has been painted back here in December at $1.20, if you start to reverse here and you confirm this inverse head and shoulders pattern with just continued divergence at that point, the RSI would probably be somewhere down here and then start to pivot. All right, you'd then have double Class A on the RSI, most likely have double Class A on the MACD with an inverse head and shoulder structure. Dude, that is like the dream setup, especially at $1.20 historical support. That is like a dream setup for Cardano to at least get back to $1.50. And then from there, I mean, we're talking probably this peak back here like $1.85, right? Back from June 4th. On something like this, this is exactly what you want to look for, because it just shows, right? There were a certain number of people that own the asset here. It came up, it sold off. There were less people, got back up. Now it's confirming, right, that people want to be involved with the asset. There's more people that own it now, are holding it and are buying it at $1.20, confirming it as support with the divergence. It's just what you really kind of dream of, especially in the market right now with what's going on and Bitcoin selling off. And here's the thing too, Bitcoin at that point, if Cardano keeps selling down, Bitcoin could be also selling down, bringing the market with it to its 40 mark. And then that's where its reversal comes in, and that's where Cardano also gets some love and support and confirms the structure. All right. Pay attention to Cardano right now. I know it's, it was down, what, 8% on the day, so you might just turn your head to it and be like, oh, it's trash, it's dead, it's gone. Dude, it could be setting up for something beautiful. There aren't really many assets out there. I haven't seen any other ones that are showing inverse head and shoulder type stuff at levels of support with the divergence and everything. Dude, it just looks good. And then the 4 hour got the golden cross. All right, not too much weight on that really, but I mean, technically it's there. I don't know how you don't get hidden bullish divergence on the 4 hour. I mean, ultimately we want to kind of come back down to create that other shoulder. So we'll see with that one, but yeah, below the 50-day moving average, holding on to the 200 on the 4 hour, and yeah, ultimately we want it to come down and form this kind of shoulder or whatever. All right, let's go. And get some freaking love for Cardano, man. Been crap the entire rally all the way through September, right? Doing nothing, going sideways, selling off. Cardano's dead. It got flipped by Solana. Ugh. It looked terrible. Okay. But it could potentially be doing something really good here, all right? So that's it, man. This one is on the watch list 100%. We're going to move it over to sand. All right, I want to talk about this again because this is also another potentially beautiful setup. All right, with the metaverse, right? I know Microsoft, I don't know if everybody has seen, but Microsoft just purchased Activision. It was like the biggest deal they've ever made. It was the most money they've ever spent. So I know that the dudes over at Activision are just chilling. Money. They've got too much money right now. Microsoft gave them, they're like, I don't know, what do you want, 10 billion? And they were just like,
that's not good enough.
No. I forget the actual number, but it's like $12 billion. I don't know. Something insane. Maybe even more than that. But yeah, man, making a play on the metaverse. These companies, the tech companies, especially after the last couple years, they just have too much money and they need to spend it. So like they have to innovate, they have to spend it. And video games are the gateway into that metaverse world, right? They have the platforms already set up, the programmers, everything, to introduce you to basically a Sims life, right? You remember like the that kind of stuff? Hopefully we can still speak English in there. I've seen a few of the games and stuff they already have. You can go buy like a virtual house for $50 and walk around as like a sim and mess with people or whatever. But yeah. You remember that game, dude? Did you ever play The Sims? He'd come up and like slap you in the face, just be like, Katuma! Like, dude, what the F? Your guy would actually respond like, Zabazuba! You know? Good times, man. But Sandbox, being one of the coins in the metaverse or building the platform, you know, doing what they do. Potentially with the Gartley situation. And remember what I said here, right? What I said previously, earlier on in the stream. The Fibonacci levels, okay, in the harmonics, to make them stronger. The more you have that line up, the stronger it is. So what do we have going on here with this Gartley on the daily, potentially, right? Seemingly heading down there again, below, I mean, what did the day close down? 5.5%, yuck.
It's a piece of crap, it doesn't work.
Right, down below major support, okay. Where are you heading most likely? Maybe I'll get some support at $3.71. More likely this peak back here from November 4th, because at that point, you will be at the pattern completion zone of the bullish Gartley. And let's take a look at this specific bullish Gartley and why it's important. From your X to A, your sell-off back here from November 10th to your high here, November 26th, right? You retraced 61.8% of the way, almost perfectly. You then went back up 61.8% of the way, almost perfectly, right? 61.5. It's the 618. And that's from B to C with A in mind, right? If we're talking about moving back up from B to A, that's the C point. You've gone up 61.8% of the way from the move down from A to B, up 618. Bing, perfect, right? So we've got a 618 and then a 618, and then it started selling off. And where does it line up with at the 786? 773, I get it, but Scott Carney talks about you get like a 3% window. So if it's the 786, the 756 would be acceptable, and the 816 or whatever would be acceptable. My math is right on that.
Right.
So you have the 786 acceptable down here, and then at the 1414 Fibonacci level, those are all Fibonacci's. This is like a perfect harmonic. 618, 618, 1414, 786. Dude, it's beautiful. You don't get that a lot of the time. You'll get like, this will be like a 1.72, and C will be at like a 7.42 or something, right? Kind of off. When it lines up and is respecting the Fibonacci levels this perfectly, and this is what I'm talking about. Low to high, right? Down to the 618. Okay, cool. Then what? We go from the high to the low. Alright, we're lining up the 618, right? Cool. And then the 1414 is essentially just from B to C, the Fibonacci level down. Wait, how did I mess that up? I messed that up. No, I didn't. The 1414 down here. Alright. See in this blue area, so. Again, another Fibonacci level. On the dot, pretty perfectly. So it makes sense that the 1414 lining up with the 786 off of the 618, that's definition textbook harmonic stuff, okay? So you get down there, hopefully you have some kind of divergence or something maybe it poops around a little bit before getting there, but yeah, dude, that could be beautiful. And at that point, maybe the 200-day moving average is a little bit closer, just another level of support. And then Bitcoin gets its ish together, dude, this thing could go bananas. And then at that point, I mean, your first target off of something like that, I mean, I guess the shoulder here from January 13th, we're talking about 47%. Next target, yeah, December 25th, we're talking 6.9. That's 97%, and the all-time high, 140%, dude. So just pay attention.
Are you not entertained?
All right, cool. No interaction, man. I wish, if anybody is watching this, I gotta put up a sign or something. I don't know. This is an interactive stream. Say hello, say what's up. If you want me to look at something, throw it in here. I'd be more than happy to do so. Otherwise, I'm just gonna continue talking and move right along. And who wants that? Let's move to Litecoin. So, Litecoin. Let's take a look where it's at. Below $139, which was the support back here from September 29th. Okay? Below it. All right. Regarding also had a death cross, okay, right back here on January 6th, which is funny because like had the death cross and then it rallied, and people were probably scared. If anybody traded that alone, they're probably scared. But now back below, you were above it for but a moment, and now you are below it again. Class A bullish divergence seemingly faltering, and now you have some, I mean, not really, but this kind of stuff where it starts to go positive again before selling off. It's not quite the island you look for, right? We're not Gilligan here, but you made a higher high in price, or at least the same high with higher levels of positive momentum, which is hidden bearish divergence technically. I guess that would be like Class C bearish divergence, same high in price. Yeah, I can start over, dude. Welcome. Absolutely. Of course, always, dude. Don't I always start it over as soon as you get in here? Am I not generous? Frosty! What's up, Danny? Welcome, man. You've missed me talking to myself this whole time. But, to boot, man, on Litecoin. Look at what you got here. Let's zoom it in so you can see, alright? Testament to why this is probably going down to like 121 to check other support. You came up. Not only did you double top here, all right, so you had a double top, meaning you had your top here, this little shoulder from January 2nd. You came up and made basically the same high, matched it in price before selling off bearish engulfing candle yesterday on the 18th. You not only bearishly engulfed, and you not only double topped, you also tweezer topped. So we're talking about confluence of bearish variables, and you're now below major levels of historical support. So, dude, a lot of bearish crap going on now, and you're most likely going to 120 bucks. Okay, you got some support there back here from January 28th. And, but more importantly, recently, like January 10th. So, maybe you get down there and just paint a tiny red candle and get double Class A, all right? And get Class A on the RSI. There's a good chance of that as well. That's what we're liking as of right now, is the potential for double Class A, or I guess I should say just Class A bullish divergence on the RSI. For the first time in a lot of these assets history. You had no chance. The only spot really, I guess, kind of close was here, right? And it was slight, right? Back here, December to like December 28th, beginning to like end, you were kind of painting like the same low, and that was the moment for a reversal to happen. But at that time, you did not have Class A bullish divergence or anything like that. So it's a little more dramatic on the RSI this time, I feel, seeing how far off you are from it. So get back down there, dude. Get the divergence. This could be the bottom if Bitcoin starts to get its stuff together at 40, right? And we're talking, all right? Double bottom stuff, divergence, bang. That's what we're looking for. How's your day, Danny? Good to see you, man. Give you a spin, dude. Let's give you a spin real quick. Can only spin it when there's people in here, man. Let's go. Nice. Keeping the peasant streak alive. You like to see it, dude.
Hold up. Wait a minute. Something ain't right.
All right, man. GDI. Oh, I don't know what that means. God damn it. I think that's, yeah. I've never honestly seen GDI, man. I didn't know that was an acronym. So thank you for making me more educated.
What the hell is even that?
Alright, dude. So, yeah, Litecoin most likely heading down to like 120 again. The weekly, nothing. Right? No divergence or anything. see. Ah, yeah, the 4 hour. Okay, so here we have the Bullish Shark. Okay, and a pretty decent one, honestly. The 1414 at point C down to the 113. Shark could be the 886 or the 113. We have a Bullish Shark, and it had somewhat of a reaction. Right? Nice. Bullish Shark. It's a little warm for snow. Is it raining out or something? I don't know. But yeah, pattern completion zone of the Bullish Shark. You might just come up to test the 50-day moving average, if you even get that. No divergence or anything, so it's kind of just like whatever. Had a not even a bullish engulfing candle. The piercing pattern, technically, with a tweezer bottom. But yeah. 4.ONG. Cool. Thank you. Ezgurgig Ziahoba. Thank you.
Nice.
Alright. So yeah. Yeah, there's a harmonic. There's nothing else, right? We don't just trade the bologna. We don't just trade the mustard. We don't just trade the olive, right? We don't just trade the salt or the mayo. We want the sandwich. So, is this a sandwich? No. On the 4 hour at least? No. Not on the daily either. So, downside, probably more implied. And yeah, you got a little reaction at the shark, but then it just came and it's kind of going sideways.
Nope.
So we will see. We will see. Let's move it to SoFi. Right, Danny, I know you're in on this guy. You know, making some money.
Money.
Just chilling today. Feeling it. Feeling the cash flow. Yeah, they had some news today. SoFi finally got approved. They had like a 3-year-long battle with becoming approved to be recognized as an official bank, and they got that approval today. So let's everybody over at SoFi right now is just super excited, happy for them. Cool. Death cross, but also approval. Cool. The other side of it is they are a tech growth company. So when interest rates start rising and the money printer slows down and bond yields start rising, growth companies usually suffer. So SoFi, while that is great news, is a growth company. So everybody's moving away from growth right now. So it's like, I don't know, dude. You're back above your support here from August 17th, but you could very well come and fill this gap. It's tough. That's a tough one because it's really good fundamental news, but people are also selling off growth. So it's kind of like backhanded compliment. But congrats on the day, man. If you are still, in fact, within it, up, nice, cool, sweet. All right. It could reverse, I suppose, off of that news, and more buying could ensue. But it's like one thing you got to consider here, and it did have more of a hammer before the session closed, but it gapped all the way up to 1430 and then sold off. So it's like people were taking profits. Again, might just come fill the gap before, running. That's definitely going to be a level of support to look out for, $12.79. But, hey, man, congrats on your 13% on the day.
Oh, my God. Nice.
All right, cool. Let's move it to one of the other assets, I guess I should say, that's been performing very well. Metals. Silver to start, to the US dollar, right? Looking pretty dang good. Holding $21.53 as support, like a dream. Okay, heading up to its 200-day moving average, which it rejected off of last November 15th, all right? But heading up to its 200-day moving average, trying to get back up to that peak at $25. And first, I guess you do got to get past this little inflection point here. I'd say like 24.60, that lining up pretty nicely with the 200-day moving average. Bit of a double top kind of scenario at that price. Right? But ultimately coming down, really confirming $21.53 as support, and then making a higher low. Okay? Making a higher low above the 50-day moving average. You'll probably get a slight pullback tomorrow, just because it's, you know, up what? Like 5% over the last couple days. It's a lot for silver. So it might get a slight pullback, come down and confirm the 50-day moving average before running again. But really what you're looking at too here is this is not a formal harmonic or anything. It's just you've got the double bottoms, right? You need like an 886 or something. So double bottoming. But what you can see here is just another example of your high back here from June 1st, right? You came down, retraced 50% before selling off and then confirming this is the bottom and then moving back towards the upside. Currently at the 382, but ultimately you've come down, retraced 50%, Dow theory, but 50%, that is a harmonic number. Come down, just double bottomed, confirmed, which is cool. And now on your way to the potentially 886, right? I mean, you could do another 50% retrace from that high. I don't know. That'll be a level of resistance, but if we're talking about like harmonics and moving in waves, the 1618 is going to put you up around $27, and the 886 puts you up around just basically back at this level of resistance that you've had multiple times, right? February 24th. All right, so you've got a little bit of a ways to go. And $25, really, I mean, you could see this flex point back from August 28th, right? And then locally here, November 15th is going to be the level to break. But if you break that, yeah, you're most likely heading to like the 1618 level, 886. 1618 is near the 786 more so, I believe. But yeah, that could be a good target, $27, $28 before getting to the resistance at 28. All right, and now this is just an example of like moving in Fibonacci terms, so that you don't have to. It's so that you don't have to like. So you don't have to do this, right? So you don't have to do this, and have it on here as well. All right, and then have it, I don't know, here as well, right? So that your chart doesn't look like this. Okay, you can use a harmonic to see the levels without having a million lines everywhere.
What the hell is even that?
Give myself a spin too, dude. Danny, I don't know if you left, man. I appreciate you popping in, but if I'm gonna be here, I'm gonna do it. All right, I'm gonna do it right. I'm gonna have fun. I'm gonna tell everybody that I got a God. If you're watching this later, whatever, man. Nobody else was in here. I got Zeus.
Godlike. Let the
You can't tell me that I did not, because it's my stream. Okay. Dang, made it rain. Caused it to rain, alright? Whatever. We do what we want. Is it really raining outside? No. Alright. So yeah, that's where you're looking out for silver. Let's move it to gold. Okay. Take a look at gold here. God damn it, it's freaking bright. If anybody knows how to turn Word into like a dark mode or something, dude, even just changing the brightness on my computer was a pain in the... But I get it, dude. There's settings and then just go to brightness. I tried it. It's not there. I had to download some dumb thing. It didn't work either. Pissed. Anyway, gold. Silver and gold. Where am I? Cornelius. What's his name? Cornelius? Contractor. Corn on the cob. That guy from Rudolph. I think it was Cornelius, the pickaxe dude. My favorite character. Anywho, let's see here. Gold. Holding the 50-day moving average. Alright. On the daily, that white bar. So, seemingly holding the 50-day moving average, you are above these inflection points. And let's actually move it to the weekly. That's what we were talking about. So, holding the 50-day moving average on the weekly, right? Really, for the first time, like you didn't confirm it back on November 22nd, you just fell right through it. So, treating it as support for the first time since, I mean, really? Yeah, nah, because even then, I'm talking about coming down and touching it and then going up. We're talking back in November 30th of 2020. You have come down, held it, confirmed it, and you are now back above these little peaks here. And this is on the weekly from August 30th, touched multiple weeks here in like July and August, right? So you're above that at the price of $1,830 per ounce, right? Heading to 1,877, which is a further increase of about 2% at that point. And then you break that, you're heading back to the other inflection point. That's about a 4.35% increase. Whoop-de freaking do. But you can't deny that it's not showing accumulation. And yeah, you had this big wick come down, which touched the inflection point from March. And again, just a testament to this stuff actually works and holds up. I mean, look, price came down and perfectly touched the support back here, right? Like, perfect. It didn't go through a little bit. It's pretty much perfect. So, while it doesn't work the way you think it's going to 100% of the time, you can make sense. Like, it's pretty clear that this, especially back here from June, right, was a level of support at 1,678. And it just comes down with a huge wick, and then boop, buyer orders were waiting, push it all the way back up to the bottom. The hammer of the gods. Kind of pathetic playing regarding the 50-day moving average as resistance again at that point, but now making a higher low. Okay, breaking the support above the 50-day moving average. Breaking it. All right, so good stuff happening. Also, the golden cross back here, December 2nd. Okay, cool. Bullish engulfing candle yesterday. No, that was, I guess that was today. Yeah, this is a live market, so that was today. Huge bullish engulfing candle. Really, what this is a rising three methods. All right, if you go to Bukowski's website, you will see that you had the big green candle here, January 11th. You had 1, 2, 3, 4, 5 candles within these two. You can have as many as you want, right? Rising three methods, you need at least 3, but 5 is cool. Came down, 50-day moving average, 200-day moving average. Then this massive bullish engulfing candle, and it broke through resistance. This is a valid rising, 1, 2, 3, 4, 5 method candle. Japanese candle confirmation or whatever. I'm sorry, did I say Bukowski? I meant Steve Neeson. My bad.
Right.
But yeah, and the more candles it engulfs, the stronger it is. So really good, wiping out this bearish engulfing candle from January 3rd, and we'll see, man. All right, gold getting some love in these times of inflation. Oh my God, it's actually doing what people say it's supposed to do. Cool. Again, though, it's like, I don't know, they're raising rates and everything, so they're actively trying to fight inflation. So if inflation goes down, then won't gold go down again, like sell off? I don't know, just asking questions.
Okay.
All right, gold, yeah, potentially back to up here, 1878. All right, that's gonna be the next target for gold, which would be a 2. It's like that, but that's what I mean. It's like, ugh, dude, it's pathetic. 2%, cool. Inflation is like 7, right? At this point. I know that's not gonna stay there, but like, I don't know. What am I gonna do?
Hold up. Wait a minute. Something ain't right.
All right, let's move it to the S&P 500. All right, let me just clean this up a little bit so we can see where we are first. Excuse me. All right, let's move it to the daily. The daily below the 50-day moving average. Oh my God, I've had that up this whole time. I'm gonna be all black and gray or whatever, probably. Anywho. All right, you closed at the hammer from December 20th, right? You are below the 50-day moving average. All right, where it was once regarding it as support. You haven't fallen this decisively below it really since September 28th, right? So there's stuff going on. I mean, just look at how long you regarded it. You were above it and regarded it as support. It's like you've fallen below it now. The main thing with the S&P 500 is if you fall below the 200-day moving average, because you have not been below the 200-day moving average since May of 2020, right? You've barely been below the 50-day moving average. So if this correction stuff is really happening, and the NASDAQ is down about 10% from its all-time high, that is the definition of a correction, at least 10%. So the NASDAQ is officially in a correction. The S&P 500 is not quite in that same ballpark, and that's because the NASDAQ is more heavily weighted with like tech, but it's about 6% off from its all-time high, so not quite in correction status yet. But still showing some stuff, right? Broken below the 50-day moving average, below this peak back here from September 2nd. So next level of support, this inflection point, December 1st, that's at 4,500, whole number, cool, like it, whatever. But really, if we're looking again at harmonic kind of stuff, we're looking at a cipher right here. This is a bullish cipher harmonic pattern, right? So we've come down, 50% retrace. It can go as low as 618, 50% retrace, up to the 1272, another Fibonacci level, down to the 786, and that's at the 1414. So another kind of textbook harmonic in play potentially. And if this is following true to that theory, then you're heading down to 4,381. The 200-day moving average is waiting for you down there. And again, you fall below the 200-day moving average, dude, it could be curtains for the market. Because at that point as well, something to keep in mind, down there, you're at 9% off of the all-time high. Remember that 10% is correction period. So we'll see, dude. It seems like Rona's getting a little better as far as lockdowns and stuff like that's concerned. But now we have like Russia about to invade Ukraine. I don't know, World War II, maybe.
So you're telling me there's a chance?
Maybe a chance of it. I don't know, but I don't think that would be good for markets sentiment. All right. So I mean, we'll see, man. And as bond yields rise, people will move away, could just continue to move away from stocks and growth companies, and which are tech companies, which have just been the reason that this market has been going so nuts. Or they've really been why it's been going up so much. Yo! Nick, what's up, dude? Welcome, man. Thank you for stopping by. I give you a spin while you're here. Danny got peasant. I gave one by myself, and I got Zeus. Don't rewind the clip, because just believe me, alright? Dude, are you freaking... Godlike! What the hell is up with you and Poseidon, dude? Every time. That doesn't make sense. It makes 0 sense, man. And I'm always like, we're in the Discord, and I'm like, dude, Poseidon, like, why is this name? His name's still Poseidon, kind of dorky, but you literally get it every time, dude. I'm gonna have to change your name color blue or something. You've like officially. I'll have to do that, dude. I'll have to track how many times people get a certain thing. It's like once you get 5 of it or something, I'll change the color in the Discord, and you'll like officially be beside it. But dang, dude, for real, it's crazy. Don't know nothing about my work. I say. That's right, dude. I don't know anything of your work. Nice, man. Congrats. Danny got peasant. This is his like 3rd time in a row getting peasant. So 5 in a row, dude. And he's like done. Yeah, I think, dude. Honestly, I don't know. I'm not gonna go back through all the videos to check, but you might have met the minimum requirement to get your name colored blue. Yeah.
Oh, do ya?
Nice. All right, man. Get Officer, frick, dude, I can't remember his name. Damn it. You know who I'm talking about, this guy. Damn. Really can't remember his name. Yates. Harrison Yates. Let's go. Got it. Frosty. I'm still frosty. All right. Let's take a look. We're looking at the SP 500, dude. I'm getting sidetracked. All right. Again, right, we've got this kind of wave stuff going on. You get down to the 1414786, right? Confluence of Fibonacci levels. Oh, thanks, dude. Yeah, I've had it for a couple now, but yeah, man, it's funny.
Do ya?
Oh, do ya? Peruvian puff pepper.
So you're telling me there's a chance?
But, yeah, so, I don't know, dude. We get down there. Might not be great, all right? The story, I mean, that would be a decent reversal point for the market, but you start coming down there and you just do like this. Oh my god, and you make a lower high, right? Before maybe coming, I don't know. We'll see. I don't know, but if tech companies are going to get affected and start selling off and keep going down, then the market, yeah, you're in for like a real correction, and maybe the Nasdaq is just a foresight into that, right? A foreshadowing of what the S&P 500 is going to do. So we'll see. Let's move it to Ford. Nick, dude, how was your Wednesday? Was it good? Was it bad? Talk to me. Are you okay with the Eagles being out, losing, and all that kind of stuff?
Nope.
All right, do you need to talk to this guy? Okay. Look at Ford in the meantime. Ford is still, I mean, look at it, dude. Like, beautiful, okay? It's been amazing. Now, you are back above, and this is what's so cool about it, right? You're above this inflection point, this low, this support that you've had March, you had it back here, September, you had it here, December. And what do we, but like, how far back is this? This is forward, right? 1998, 2000, and 2001, all right? This is a multi-year level of support, all right, that you have not been above since August of 2001. And you are back above it once more, right? You had a big bearish engulfing candle today. It sold off a lot. But that's fine, right? You're at the top of the channel. I believe you were a little bit you're in overbought territory, right? And now you're just coming back down to that support, to regard it as support, right? You haven't touched it in 20 years. Imagine coming back down and now holding it as support. You will also be at this supply line. Minor gas leak. Dude, what is going? Stop it. You know what that needs? More money. You don't want gas leaks, man. You've not been there long enough to have gas leaks. Knock it off. How's your carbon monoxide detector working? Sad about the birds, but let's face it, it wasn't. Yeah, man. I don't think anybody, like, even if they did win, what are they going to go beat the Packers? They're going to go beat the guy that's immunized? I don't think so. Yeah, dude, that's what I'm saying. Henry Ford coming out firing. And they've just been boosting their electronic output, I guess, right? They've been like, we're going to double production and we're moving to all electric trucks, but they've just been on the ball when it comes to innovation, and this is what happens, man. The market likes it. Markets, investors, I'm in a meeting. They like innovation, right? You go to Chevy or something and they're just like, what? People like gas. People love gas. We're not changing. Then, yeah, fart noise, you're going down. Carbon monoxide, just fine. Good. You need the, yeah, dude, I can get it now that I can get it off whatever video I want, so I'll have that tomorrow. Maybe next. But yeah, so coming back down to test that support, you've got this demand line that's ranging back from September 20th, right, as support as well. You'll be right in the middle of the channel, so yeah, I mean, Ford, it's okay. Had a really bad day, but it could just come down, hold it, and reverse back towards the upside, all right? If you start doing like this, okay, and then it's a little bit of a different story, and maybe it's time to sell out of Ford for the time being, as far as like a swing trade, but I don't know, man. Long term, I like it long term. Ford might be one you just want to kind of continue putting money into over time, dollar cost average, that kind of stuff. But if we're looking for signs of swing trading, yeah, a double top up there or something with maybe some bearish divergence, that could be the ticket to be like, all right, I'm gonna get out of Ford for now. Talking for Raptors, right? F-150 and focusing. Cool. All right.
Okay.
Yeah, that's really it, man. That's pretty much all I had. Nick, I appreciate you stopping by, man. A little late, dude. A little late. You missed a lot of the good stuff, especially Cardano, man. Cardano, potentially the trade of the century. Okay. So, go ahead if you could find it. I don't know what timestamp. Maybe it's at like 30 minutes or something. It might be around there. But yeah, dude, Cardano, really good setup. I'll put it in the Discord and stuff too when I get off of here. Yeah, that's right, dude. Better late than never. But never late is better. Alright. Moving back to Bitcoin real quick. See if it's doing anything. Nothing. Alright. Catching a little buying activity. But ultimately, nada. Still below 42. Get above 42. Get above the 50-day moving average on the 4-hour. Alright. Ultimately, though, what we really want to see, we want to see it come back and hold 40 and then reverse, okay? All this kind of stuff. That's the ticket. That's the dream. Yeah, dude, start over. You and Danny, man, you guys just want to come in, William Nilliamson, and just start it over, dude. Can't do it. I would if I had more time. But I got to go get some grub. I'm going to go to the Sizzler, get some grub. That's going to do it, though, man. I appreciate you stopping by, Nick. Truly makes this a lot better. Even if there's just a couple people in here, man. Just somebody to say what's up. It's nice. But, yeah. So, you enjoy the rest of your Wednesday night. If you want to check out that Cardano analysis, it's in there. It's in the middle somewhere. You can just find the chart, skipping around the images or whatever. But, yeah, man. Enjoy your Wednesday night. We got to do something this weekend. And, yeah, anybody else that's tuning into this, of course, Arpon, you'll get it. I don't want to prematurely say it. But, yeah, guys, jump in. It's now here. Now it's here. All right, it's not above me anymore. Now it's here. We move stuff around. We keep it fresh. The Discord, jump in it. The Instagram, follow it. The Twitter, embrace it. I don't know, follow it too, I guess. I don't know, whatever. Yeah, go ahead, give the video a like, dude, a subscription. All right, all that stuff just helps me get eyes on the channel, man. Helps me be seen, because you know your boy's a little bit shy when it comes to promoting. So I'll take all the help I can get. Yeah, that's gonna do it though. Appreciate the love, the support. I will be back Friday, but until then, keep it real, keep it fresh. And as always, keep it technical. Our pies.